Hello, everyone. Good morning. For those of you that are joining us live, thank you for being here. For those of you that may watch this presentation later on, hey, thanks for being here as well. This whole conversation that I'm calling the Fintech Onramp is purely from conversations that I have with fintech founders that are early stage in the process. There's nothing wrong with early. It just means that your needs, your questions, and just some of the advice that you might be looking for is going to be different than some of your peers that are a step or two ahead of you on the journey. And I have discovered in working with fintechs of all shapes and sizes over, goodness, the vast majority of my career, starting at a large enterprise core company to working with bootstrapped founders that have clients, as well as bootstrap founders that are working to get clients, and those that are just starting with the ideation and building out their MVP, that we all have different needs. And sometimes the way in which our market being fintechs, our market being banks and credit unions, the way in which the market is structured is not always as friendly to those that are on the early side of their journey. Those of you out there that may be looking for your first bank or credit union conversation, those of you that are interested in getting your hands on funding, but perhaps some of the investors you're speaking with don't really want to talk to you until you have some bank or credit union wins or POCs to point to. I hear you. I hear all of that from the individuals that I speak with each week. And as just part of wanting to provide some value out there to fintech founders wherever they are in their journey, I like to have these monthly type of conversations, which I call the Fintech On-Ramp Monthly Roundtable. And they are truly geared towards those individuals that are seeking their first wins. They are looking for that validation and they are seeking guidance and don't yet have the ability to hire an individual for this type of advice. So can we all just be good people out here in fintech and banking and credit unions? I think we can. So here's what I have in store for you all today. We are going to go ahead and get started. Just a short little presentation. And if we have any individuals that have questions as we're going through this conversation, please stop me. You don't need to stand on ceremony. But if you're in the live studio or joining us on LinkedIn, both of those provide you with the ability to ask questions. Otherwise, I will let you move on with your Fridays at the conclusion of this discussion. So our topic this month, how in the world do we get in front of bankers? And I'm using bankers as a global term to talk about bank employees and credit union employees, both of which providing services related to banking, either customers or members. So this is a big topic, and it's one that hits home for me every single week. The absolute number one thing I am asked for every week is to provide referrals, and all sorts of different structures and arrangements are presented. And I get it. That makes very good sense. Partnering up with someone that has been in the space, that has connections or a network of individuals that you want to sell into. I do think that can be problematic. And we're going to talk about that theme here as we get going, and alternatives, as well as like what do you do when you get in front of that banker? But let's first get a chance to start with perhaps some things that might not be working in your favor. All right. When you think in terms of sales and having discussions with bank and credit union employees, it is not for the faint of heart, because you have all sorts of things, regardless of your industry, regardless of whether you're in financial services, that are working against you. These are even more pronounced, I dare say, in regulated environments like banking, like government entities, healthcare as well, I suspect, education. But in the financial services space, these things, those gatekeepers, the people that are keeping you from talking to the C-level that you'd really, really love to have a conversation with, are going to be individuals that are part of your reality that you need to be thinking of and planning around. Silent inboxes, man, this is a topic that I can speak about for weeks and weeks and weeks because we are so bad in fintech about inundating bankers with just message after message after message. Of course, these poor bankers aren't responding because we might be putting out just generic mass email messages, same type of conversation points to every single person that we're speaking with, and the message isn't resonating. Not to mention that their inboxes are filling up with other people that look exactly like you. People that these, bankers either have to evaluate in a split second whether that email is warranted and deserves time and their attention in this day. We also have this problem, at least I feel like it's a problem in fintech sales, where we're typically reaching out to some of the wrong titles. And we're going to get a little bit deeper into this, but it's our inclination. We think we have to go straight to the seat of power. And for most of us, that's thinking we need to interact with the CEO. The CEO, which, by the way, will absolutely have a gatekeeper, and the CEO, which, if we're all thinking we have to go to the CEO, of course they're going to have silent inboxes. They've got other things to do, people. They have got institutions to run. So part of these prior two challenges are the result of us going after the wrong titles in the space. We're going to get a little deeper into this. Let's go ahead and move a little bit forward here. Because this whole concept, this is nothing new. This is not earth shattering. But to gain access to a banker, it is not a volume game. Folks, if you think you are going to turn on the latest version of Claude or OpenAI, and you're just going to have it spit out personalized email sequences and send those on your behalf, and that the leads are just going to start just raining in, I dare say you are in for a very sad or rude awakening, whichever one it might be. It just doesn't work that way. In a SaaS model, that's the typical playbook, and that's something you have to be cognizant of. If you have investors that have done fantastic work in the SaaS space and they have built a name and a machine around SaaS related businesses, a common type of element is to get lists, try and personalize those lists. And I'm saying personalize here based on role, based on entity, based on LinkedIn profile, things like that, all none of which are bad inherently, but that you're just trying to mass blanket the market with this type of insight or an email that's all about you or all about the product, by nature is just not going to work. Those types of SaaS motions tend not to work in heavily regulated and trust-built industries like the financial services industries. I'm not saying they can't. I'm not saying you will never get a response to a cold email from a banker, especially if it's well written and it actually portrays something of value to the banker. It's just not where you're going to get the biggest bang for your buck. So let's go ahead and start talking about what it looks like on the other side of the screen selling into a bank. And it does make sense. These individuals by nature operate in a very risk-averse industry. That doesn't mean that they are risk intolerant or that they say no to anything that's risky or new or innovative. Not at all. Bankers are some of the most innovative people I know and that I get the pleasure of interacting with each day. But you have to very much prove why you're reaching out, what the innovation is that you're offering, and what the value is to them. Even better if you can receive an introduction into them or create your own network into an organization, all of which we'll chat a little bit about later on as well. But if you can be introduced, it's a much cleaner type of scenario. It doesn't mean you should be looking for all sorts of referral partners, not at all. But let's go ahead and let's start talking about why these traditional SaaS-based motions just tend to not work in banking. That cold outreach model, like I'm never impressed when someone says, I have a list. I got a list from another fintech founder that's a friend of mine. I bought a list from an event. That's fantastic. Good for you. And I hope it works out well. But banks by nature are built to avoid those types of surprises that you see right here. That gets back into that risk averse nature of the banking industry. These individuals are just just built and trained to mitigate risk and to quickly evaluate and surmise whether what you're telling them in cold outreach email makes sense and is warranted, pertains to them. If you're not hitting those marks and checking those boxes, you're getting deleted. And these individuals are very, very busy, obviously. Bankers wear a lot of different hats, even at some of the largest institutions. And these individuals have quite a few things under their purview, especially if you're going upstream and trying to speak to the C-level. Makes sense, right? Like these people have other jobs to do, they have other things that need to be done. And they're often shielded by those gatekeepers, like we chatted about. And that's why these individuals, it works so much better if there is a trust oriented channel, these channels that we'll look at in a subsequent slide, but they tend to pay more attention than simply a cold outreach. Again, I'm not saying don't do the cold outreach, do it smartly. Don't just mass blast the entire environment, okay? Well, let's get a little bit deeper into this conversation. So, where does this door actually open? Where should you be paying attention? A lot of that depends on where you wish to focus your attention. And I would suggest when you're thinking about your product and bringing your fintech solution into the banking and the credit union space, that you think in terms of a spectrum of banks and credit unions. This will make sense. This is, again, nothing new, nothing earth shattering here. Money center banks, or even more appropriately, I could have titled this super regional or tier one banks. We use a lot of nomenclature in the industry. These are the big ones. These are the banks and credit unions that have lots of money in assets. They're a large asset size. Additionally, these individuals likely have innovation teams, in-house dev teams as well. And these organizations are very, very large. And they often, just by nature of the beast, their size, their complexity, their current capabilities and infrastructure, tend not to make decisions as quickly. It's not a negative, it's a fact. You also have these regional banks. Regional banks is a great marketplace, depending upon your solution, where you can launch or grow into. And these regional banks I'm calculating here or categorizing as between 10 and 250 billion. These people do have budget. They do have teams. They do often have in-house talent that can also do dev work. And all of these are viable routes. But I have often found over the course of my career that the quickest route into this space happens to be within a community bank and or credit unions. And here's what I often find, and I could have actually just started this. Like, this is really just any bank or credit union, over 20 million up to, in this case, 10 billion. We're going to regard as a community bank for our discussion today, or a community credit union. Here's what I often find from fintech founders and sellers. They think this space is antiquated. They think they are slow. They think that they should not shoot here, that they should shoot up to one of these later, bigger targets. I will tell you that is absolutely not the case. These organizations are often the most innovative, the quickest to adopt new technology, and the quickest to roll out that technology, frankly, because they can. They're smaller, they're more nimble, they're agile. They also provide and rely a lot upon their current tech stack, and those core systems and the other players they interact with do tend to be very open in working with new fintechs. So I would challenge you all, anyone that's thinking about what their early customer profile looks like, to at least heavily evaluate this space. These players are going to be doing all of the same level of sophistication that you will see from the larger banks. They're likely going to be doing it at a much quicker pace. And they'll be doing it very efficiently as well because they have to. They don't have the opportunity to throw people or dev teams at problems. And I hope that makes sense, folks. I'm going to go ahead and move on to the next conversation out here. And this is something you may have understood from my allusion to this earlier. When you are aiming your outreach efforts, don't just aim at the CEO and think that's what's going to get the job done for you. That CEO has a lot of other things requiring and demanding their attention. I'm not saying not to interact with the CEO. That CEO can be a great resource with a well-written email or a well-placed and communicated phone call to share your message inside their organization. But you can't rely on just the CEO. That would be imprudent just to focus outreach efforts there. You need to build up within the organization, starting with who in the world owns the problem you're trying to solve. So inside a bank, there are going to be a number of different departments. This is not an exhaustive list. This is a very summarized category list. But the person that owns the problem, you need to ensure that they're part of the conversation. And you need to layer in the other team members that are likely going to be involved in making a decision for your solution. These are going to be team owners like the CFO, perhaps, or someone in finance, someone in IT. You might have the larger organizations, someone in procurement. Definitely risk, compliance are going to come into play. And depending upon who else is on a bank's technology committee or an executive committee required to make these tech decisions, you need to be thinking about starting from all sorts of different levels and angles and bringing in these individuals to the conversation and to the value that you can provide. And you truly do have to know what these roles do, and you have to know what your solution can do for them. Remember, everyone, we are working with humans here. We are working with people that want to do good for their business. They want to grow their business. They want to reduce expenses for their business. Oh, and by the way, they would like to look good personally. They would like to be the person regarded as the person that made a fantastic technology decision, a great sound business decision by recommending and forwarding your solution. So let them understand the dots you connect between the business world and help them to also see how solving these problems lets them dream a little bit to their next role within the organization or a bonus or something else that makes sense and is meaningful to them personally. And this is something we can absolutely chat much deeper about in future discussions. But let's talk about how we get in front of these bankers. We've been talking about how you can not get in front of bankers. And this is by no means an exhaustive list. In fact, there's just so much you can do. But let's talk about some of these aspects and where they can come into play. Number one is a warm introduction, and that's no shocker, right? That's why people reach out to myself or others that look like me or peers in the industry, because they would like access into networks. Now, using someone else's network, borrowing their network, not a horrible idea, but keep in mind that you want someone that's going to be focused on your business. Like if this same person's recommending 20 or 30 other products, even 10 other products, just evaluate the type of airtime and just how valuable that airtime is going to be whenever they are talking about your solution in one breath. Oh, and by the same way to the same banker, positioning another type of solution. So when I say warm introductions, I'm not saying don't ask for people to introduce you, but start with where you are. Where do you bank? What institution has your own business? If you are trying to start with a pivot, like a pivot case or planting your flag in a community bank, but you're banking at a tier 1 bank, I'm going to challenge you a little bit to think about your own personal private banking associations and those relationships. So, quite honestly, I would absolutely love you to start thinking in terms of your own bank. If you cannot go to your own bank and say, listen, I would love to get your read on something that I have built for banks that solves this particular need. And you can say that. Some of my favorite ways to make that very conversational is to say, you know how X, you know how this happens, and here's the problem. Well, I've built Y to solve for that. I'd love to share a little bit more with you, not just to get your feedback on it. So start with your own bankers. If you are banking at a bank and they're not giving you the time of day, you need to evaluate a secondary bank relationship with someone that you're trying to sell to. If you're trying to sell into the regional banks, open up a relationship there. But you must have some sort of insight into those organizations. I just want you to be very cognizant that it's tough to bank up here. You have this disassociation when you're trying to sell down here. So try to bridge the gap. Not saying close out a JPMC account, but why not open an account at an organization you're actually shooting for? I would also like you to think in terms of your own network. Like, who do you have in your family or your friend circle that knows a banker? Start there, especially before you reach out to someone like me or others that look like me. Because here's my take on things, you guys. I will absolutely organically make conversations happen for people and products where I see a fit. That is not something that needs to be transactional. We can all be good people out here in the fintech space. But the offer that people try to shove my way most of the time is some sort of a success based or outcome based, or you want to give away equity. And I just want to say, please don't start there. Please begin with your own banking relationships. Please ask your family and friends for introductions into their bankers. Check out state associations as well. Like, if you haven't looked at the ABA's state association list or the ICBA's state association list and tried to interact or attend those events, I think you're missing out. There are some pocketed states around the country where there's just a lot of banks per capita. Let me tell you some of these. This might surprise you. I would strongly suggest you look at Iowa state bank associations, Illinois state bank associations, Missouri state bank associations. Those three might surprise you. Those three are very dense in banks. And when you show up their state associations, you have a lot of very direct conversations instead of showing up at a big corporate industry event like we see coming up later this fall. The other two that are also heavy in banking relationships, these might not surprise you, Texas and Florida. Those five states are going to be very, very heavy in the bank and credit union space. So start there. Start there with your own network, your families, and those state associations, of which you can commonly attend at a very attractive price point compared to the other organizations. All right. Then as you go through this list, then we can start talking about people, that might charge you for intros. But please don't start there. Please don't think that's your route to success. Another thing that you can do, and it's such a great play, core systems and ecosystem partners. Now, as I think back to my career at Jack Henry, there was a period in which I was managing about 20-ish channel partnerships all in. Not all of those channel partnerships were super active or even productive because they were each built in a way that was negotiated separately with the organization. Some of them were structured to where I, as a revenue leader, had to pay closer attention to them each month based on what had been negotiated. Webinars, time with my revenue teams, pipeline reviews. There's a lot that can be built into these motions that go above and beyond a simple referral partnership. Now, are you always going to get those negotiated terms? Absolutely not. But when you are seeking a channel partner or some sort of an ecosystem strategic alliance, folks, do not think that just signing an agreement means that the deals are going to start flowing in, that the spigot's going to be turned on. It doesn't work that way. For example, when I was at Jack Henry, the teams that I oversaw, we had over 100 other products we could sell that we carried a quota on, that we were paid commission on when those opportunities were sold. Which is why, of those 20 channel partnerships, the ones that got my attention, both when it's seller and sales leader, are the ones that required me to pay attention. So think about that. A simple referral relationship only really works if it drives business, revenue, and or commission for that channel partner. So I can go on and on and on about structuring channel partnerships, and likely will over the course of the coming months, because it's such a great opportunity that just is not often executed well or managed well. So perhaps we can always get deeper into that. All right. Additionally, from the ecosystem side, I hope each of you are making friends with other fintech founders that are addressing the same market, that don't directly compete. And you'll find these people on LinkedIn. You will find them also at events that you can interact with. You will find them on LinkedIn groups. You will find them just by paying attention to alerts that you might set up in the space for the market segment that you're looking for, your GPT daily reminders, your Google alerts, if you're still doing those as well. Those are going to be good sources if they're managed well. And when I say managed well, like, you have to be an active participant. You should be thinking in terms of co-sponsoring articles, co-sponsoring webinars, having someone with a presence come in and moderate a panel discussion between you two as strategic alliance partners. Things that help you both increase your reach within your current customer segment and bank segment and credit union segment, and beyond your current segments. That's the goal. You each want to be able to refer each other, bring each other into the deal, and you'll want to be thinking in terms of logistically how that happens. How do you operationalize that? Are they introing you and the bank or credit union signs two separate agreements if they decide to do business with both of you? Are you white labeling and they're putting your product on their paper, or vice versa? There's no right or wrong way to do this. If you're going to form these relationships, though, and number two, you've got to put some thought into it. You have to understand as well what's in it for them, what's in it for you, and you have to work to enable those types of discussions. Again, I'll step off down from my soapbox, you all, at this point in time around this discussion. But this is one I am passionate about: channel partnerships, how to do them well, how to manage them well, how to actually get money from them. I have touched on number 3 a little bit, ladies and gentlemen. This is the conferences and associations. Please hear me. Please hear me on this. You do not need to spend thousands and thousands of dollars at the events coming up this fall. There's a big one we see every October. It's a fun one to attend. It is not a great one, I have found, always, for the fintechs I advise and work with, to generate new business opportunities, unless you're very deliberate about it. I would never suggest that you purchase a booth, an exhibit at this big unnamed show that happens in Vegas in October. That is just, it's too overwhelming. There are too many people there. If, however, going back to number 2, you and one of your ecosystem partners, a strategic alliance partner, and you wanted to go out and host a breakfast, host a dinner or a happy hour, do something off-site, and work with someone to help get people invited. Let's say maybe neither of you have a big brand. You can always bring someone in to help you with that. There might be a cost for it, of course, but someone to lend their name to your organization. But make it valuable. That's such a better spend of your money, your very scarce resources than that big booth or anything else. That's why I'm a huge proponent of looking at more of the individual associations, the state associations. Again, check out the ABA side, check out the ICBA side. Both of those have state associations. Most states in the country subscribe to one or both of those associations, and you'll see counterparts out there. Remember those 5 states that I mentioned earlier, and I suggest you experiment with those. See if those types of discussions work best for you. If you need a full list of the conferences and associations, can I give you what it might be one of the best kept secrets in fintech? If you're saying yes, please, please, please pay attention to this one. The William Mills Agency. That's williammillsagency.com. If you go out to their homepage, and I'm going to actually just put this out here, the William Mills Agency. And I realize I cannot speak and type at the same time. Their website on the bottom right-hand corner of the homepage lets you pull down a list of a conference and trade show directory. They update it every year. They will show this by breakout, like those that are lending related, those that are deposit related, perhaps those that are a bit more like payment related. I shouldn't have said deposit. Lending, payments is one, bank, credit union, and a chronological one. You guys will find that, I hope, extremely helpful. And it's a fairly exhaustive list. I'm not saying it hits every single show out there, but for the most part, boy, I got to tell you, it's one that you are going to enjoy having. You do supply your email address. I cannot speak highly enough about that asset, and honestly, that group, if anyone's ever looking for some feedback on that group. All right, you guys, I guess number 4 right here, matchmakers and accelerators. It pains me to say I perhaps I do fall a little bit into the matchmaker category. Do not start with me. Instead, also look at these accelerators. If you do have some proof points, especially a couple of POC wins, some traction with your solution, you might find that you can get into these accelerators like the ICBA Fintech Accelerator, Alloy Labs, or one of the many others. BTV has an accelerator. Cafe has an accelerator. Let me know if you need some assistance with these names that I've mentioned. But these accelerators, some of which will take you without any proof points. I have found that those proof points, the POCs rather, definitely help, or any sort of paid pilot. Matchmakers are always individuals that can help you, and I can make some great recommendations for people that are very comfortable making referrals and taking an outcome-based fee. I will do that if it makes sense. If it makes sense for the FI that I'm speaking with, if I happen to know of a company, I love to provide that information, and that's not something that I need to be compensated for all the time. I do, have different types of offerings that are much more meaningful, less hit and miss in that regard. But please, again, don't start with me. You guys have other resourceful ways out here before you resort to having to pay someone like an individual for referrals alongside of other companies they work with. Now, I've listed this one here, number 5, like as the lowest yield, but probably the one thing that you have the most in your control and that provides the biggest long tail benefit. I cannot underestimate the importance of your founder brand and your company brand. This gets uncomfortable. And in all honesty, I have not been doing my own great job of this on LinkedIn. So this is more of one of those do as I say, not as I do type of situations. But people want to hear from you. People want to hear your story. People want to hear what you saw in the marketplace that made you start your company. What was it? What was that aha moment? What'd you do about it? And start talking about it. Start putting out your own content. Videos are very cringeworthy. I know. Please consider it. Please consider trying to solicit podcasters and see if you can chat with them and be represented in front of their audiences. There's so much good you can do. And that also helps set the stage for you when it comes time to speaking of stage, being on stages, getting the invites to join panel discussions. When people see that you have unique thoughts, that you can string two sentences together, and trust me, you can. Maybe it just takes some practice, but you can do this. And this is something that you should be doing right now. Okay. All right. Moving on. All right, this is no shocker for you guys right now, and I do see some questions coming in here in the chat. I will absolutely get to those, but you guys know this. Oh, hold on, just a moment. I have a special guest star, Bronny.
Do I have permission to get the key?
You do. All right, buddy. I happen to be at my mom's today with our youngest, so while he didn't come on camera, you got to hear from the future, like Mr. Bishop. Maybe he'll be a banker. Maybe he'll be in fintech. We'll see. Who knows? But in this example, you all, when you are having conversations with bankers, even if they go nowhere, even if that banker says, that's interesting, or probably not the bank for you, please ask the next question, which is, I understand completely. Is there someone you might suggest that we speak with? And ask them if they will make an introduction for you. Even offer to draft what that introduction is. And you can follow that up with an email. Hey, I very much appreciated your energy and your thoughts around the discussion we had earlier today. And I understand why it might not make sense for Bank XYZ. As we discussed, you thought this person, this named individual at this institution might be interested. To make it a little bit easier, I've drafted some information about the value we might provide to this person, the outcomes that we're projecting that they can expect, and how they can go about interacting with us. When you draft something like that for someone and allow them to tweak it, and you don't make it so us heavy, you make it about the person that's receiving the email and the value you're driving, you're just making the whole process easier. So if you haven't drafted your own intro email for someone to send on your behalf, that is one thing that I'm going to beg you to do today. All right. So easy to do. You can send those through LinkedIn. You can send these out easily and just make that request. Okay. Oh, by the way, BTV, this question, Bank Tech Ventures, from whomever that was on LinkedIn. Bank Tech Ventures. They have an investment arm and an accelerator. All right. We'll get to some of these other items. Okay. But please ask for those intros. And as I was kind of mentioning, you can manufacture that introduction. So for those of you interested in the Bank Tech Ventures or the Alloy Labs or the any number of other investment companies or that have accelerators, you can help them, go through, do some research, stick one of your agents on doing some deep research into these organizations. All right. These are just some suggested topics, suggested types of areas of intro. And then, like I said, make that ask easy. Make it known who you would like to speak with, especially if they're going to be sending some sort of an outbound for you. You got to give them some type of feedback on what's in it for them. Guys, this goes back to something you've now heard me mention a few times. One of the biggest problems with cold outbound, or even intros that I have seen others draft for people to send, is that they make it all about your company. And I know why. I get it. We're proud of what we built. We want to get our company's name out there. We want to talk about our product and the problem we're solving and all the things. People don't make decisions. Bankers do not make decisions on whether to take action from an email, whether to send your email based on what's in it for you. We are all very selfish creatures. We are all thinking in terms of what's in it for me, what's in it for my job, what's in it for my particular department, my overall organization. But yeah, selfishly, what's in it for me beyond just my job? Will this decision help me get a raise? Is it possible I get a bonus or a promotion? Or at the very least, will recommending and evaluating this product not make me look like an idiot in front of my peers? You have to provide them and equip them with information that lets them know you understand their world, you understand their challenges, and you are uniquely equipped to solve those challenges. So when you are thinking of your outbound information, please take a look at individuals like Jason Bay, for example, or people that focus their efforts in outbound emails around what's in it for the other institution and proof points. If you don't have proof points, no problem. You can talk about what you've seen, why you think this could make sense for bank XYZ or credit union XYZ, what you're projecting, and ask them for feedback. Does this seem like a lousy idea? That was one of the best pieces of advice, just a little news flash here, that I've ever received in my career, was to phrase questions in such a way where people say no. Because guess what? People love to say no. People love to tell you you're wrong. And when I say phrase them in such a way to say no, I'm not suggesting that you phrase them to say, no, we don't think your product is worth anything. Phrase them in such a way as they say no to the question posed and open themselves up to a bigger idea. Let me give you an example of this. You might end an email with, would it be a horrible idea for us to speak further about this? Would it be a horrible idea for this product at your organization? Would it be a horrible idea to spend, for me to spend 15 minutes showing you how we helped this organization? Would it be a horrible idea for me to share this with you? So you don't have to use horrible idea, but it's one of my favorites, one of my go-to phrases. And the reason I use it is because people, their response, they want to say no. No, it's not a horrible idea. And that opens up the door for you to dig a little bit deeper. Folks, another little tip that I haven't outlined in this particular type of discussion where we're talking about getting in front of banks and what we do when we're in front of them is when you do get their attention, like, please don't immediately start with the pitch. All right, can we just not? You can start with value you're driving, giving them some idea that you have knowledge about their organization and about their industry, and here's what you're doing to solve for it. If you have the social proof, include that. Would it be a horrible idea? If they say, no, not a horrible idea, book the meeting and then use that meeting to be curious. Don't use that meeting to go out and start pitching. Bankers, or at least, well, I'll say myself, I despise that approach. I think most bankers do as well. You'll find that a lot of bankers and credit union employees, they are interested in keeping up with new innovations. They're also interested in being helpful if they can see an end goal, but they don't want to immediately be pitched or put on the spot to say yes or no. So I realize I'm diving into outreach tactics a bit more. Forgive me. If you'll let me just pontificate about this for just a few moments. When you get their attention, do what I call a voice of banker interview, where you say, I have been studying this space and I have a hypothesis. My hypothesis is this. Can you tell me if I am off base or not? Or I'd love to hear your point of view. Let them talk. Provide them with, additional follow-up questions that have nothing to do with your product, that have everything to do with the space, problems you're seeing in the space, and then asking things like, I have been thinking through approaches to this. One solution I've been very much kicking around is this one. What have I not thought about? Where are the holes in that type of discussion? And you can then get additional feedback from them. And ultimately, what you'd love to be able to say is at the end of that conversation, thank you so much. You have validated that I am on the right track. If you ever want to see what we built to solve for what I have been building to solve for this, I'd be happy to share that. But right now, I want to thank you for your time and the energy you've provided, and see what they say. If they're game for seeing a little bit, make it a brief type of presentation on that call, or schedule a very brief follow-up call. But the goal of these discussions, you manufacture the introduction by keeping it to information that's pertinent to the people you're speaking with. And then when you get the introduction, don't make it about you. Showcase what you know about the space. Use the terminology that you have a hypothesis, ask questions, and then you can lead into, thank you so much. That validates I'm on the right track. In fact, I have built this solution. Would you be interested in taking a look at this synthetic demo we built? Doesn't require that you give us any customer information. Would that be a horrible idea? They'll likely say no. Fantastic. Here, we'll take a look at it. I'd love to then schedule a time with you at the end of the next week or 2 weeks from now to get your input on it. Hopefully they've fallen in love with the idea and the concept, and you're on your way more now to a pilot conversation. All right. Moving on a little bit, you guys. I know we're going to get past this and into some of these questions. Thank you, Esteban. I know you needed to drop. Thank you to the LinkedIn users that need to drop as well. But out here, like, listen, I know I sound like a broken record. We miss this. It's so obvious. I miss this if I don't watch this myself, you guys. When it comes to interacting with the banker on email, in person, on the phone, LinkedIn, doesn't matter. We have to make it about them and their own personal and business agendas. Okay. We need to know what they're focused on. And if you build a rapport with these people, guess what? They just might tell you. Don't go right out of the gate and saying, okay, I'm very interested in you telling me about your 2027 strategies. They will say, well, I don't know you. I'm not gonna tell you what we discussed strategically. If you're building a conversation, building a rapport with them, understanding their world, showcasing some thought leadership, you then earn a right, or at least I say right. Yeah, earn the right to say, you don't have to share this with me, but I would be curious what you're focused on in 2027. A few things that I've heard people tell me is that they're focused on deposit acquisition strategy or retention strategies, because 85% of deposits can leave the bank at any point in time because they're not term deposits. Or everyone's focused on acquiring younger customer segments. Are these things you guys are thinking about right now, or are you on a different playing field? The way in which you ask after you've earned the right will make all the difference in the world, so that you can understand their strategies and then move beyond them. Now, I've also indicated some trigger events here. Boy, you all, we live in the day and age of AI, where we can go out and have AI search for trigger events for us. I hope you're doing these. This is not an exhaustive list, but if there are new hires at an organization, basic, right? We've been doing this for decades at this point based upon new hires. But those individuals are coming in and trying to leave their mark on the world. If you have gone out and done your proper research, pulled up an annual report or a 10K about a larger or publicly traded organization, doesn't have to be larger, but if they are publicly traded, you can find out details about their strategic priorities. Take those into conversations. Or if you do know that there has been some sort of a regulatory shift, this is obvious, right? We're all paying attention to certain key regulatory shifts right now relative to the Genius Act, CFPB, and others. These will continue to be areas that will provide ample opportunity for you to reach out to banks, especially if you have a take or a view or one for your product around it. Or this is always a great one. Hey, did you know that Bank XYZ is adopting our solution? Just wanted to chat with you to see if it could also make sense for your own organization. I wouldn't phrase it like that, but it does become a compelling trigger event for you, especially if there's either a deep mutual respect between those institutions, or perhaps even better, a competitive nature between those two institutions. So again, nothing too earth shattering. I do love this whole idea that we as founders, we as people can publish our own content. We can be our own voice. You can start a podcast. You can start a newsletter. You can provide value to these people without pitching your product. When you do so, and they see your name, or they see your name lined up with someone else's name on a panel, then it's going to change the game for you, because that also starts to feed into those inbound leads. Again, a long tail game, yes, but it's much easier to sell if people understand or have heard of the company or have heard of you as a founder. All games and things that we need to think about, okay? All right. You do have to understand people whenever you're reaching out to them. Like they get reached out to all the time by people spinning up companies, lots of people vibe coding, which I love the ingenuity and the entrepreneurialism. But these bankers are looking for sustainability. They are wanting to ensure that you're going to be a vendor that if they spend time learning about now, will be around in the future. You can't always manufacture those proof points. Sometimes you can. Sometimes if you have customers that are already trusting you, or if you can point to the fact and say, we have these people as strategic advisors. Like I strategically advise a few companies. Or if you have been funded, great. If you haven't, no worries. If you can say, listen, I have reached out and formulated relationships with these strategic advisors. They're on our cap table. We are having these discussions. I've been speaking to X amount of individuals like you each week. And we have built our business so that we have already planned and use AWS and the cloud environment and this, that, and the other. Provide them with some feeling of sustainability. And like if you have a little bit of runway, or if you're running lean, that will also be extremely helpful for you. Okay. All right. I do want you to always keep this in mind. Your first meeting, it's not to close. It's not to pitch. Your first meeting is to get to the second meeting. In sales and in selling fintech, we are always looking for the next date, the next opportunity. No one's going to marry you after the first deal, right? So, or the first meeting. So pitch with the goal of building that relationship, learning more. The more you learn, the better business case you can create with them, and the more you get them to fall in love with you. It is unrealistic to think that bankers will make super quick decisions unless you happen to get them at the exact right buying moment. It's not unheard of. I spoke with a fintech earlier this week that had a CEO from a credit union on their webinar. The deal closed 13 days later. That is what we're shooting for, to get the right people, the right moment of need, understanding our problem that we solve, feeling like their problem is pervasive and that they have some urgency around it. That is what we would regard as the holy grail in the work we do here together, ladies and gentlemen. Do not expect it every time. You have to build emotion, and it starts with building trust in that relationship. Okay? Always the next conversation. So I'm going to go ahead and just leave you guys with this one. I haven't left much time for any questions, but I'll get to the ones that are out here. So this week, I would love for you guys to focus on one institution and start with your own. Who are you banking with? And if you're not banking with who you want to sell to, open an account there and just have the conversation. These people have an inherent interest in speaking to you. They are your banker. You already have, even if it's a transactional relationship, a relationship nonetheless. Turn that transactional relationship into something more. I would love for you to also figure out, if you haven't already done so, who owns the problem that you solve. It is likely not going to be the CEO. Yes, it may roll up there, but who at the bank owns the problem that you solve? Because that is the person you must include in any outreaches. You must plan for these conversations at any events of any shape or size that you plan to attend, and shoot for a warm intro. Shoot for, like, who do you know in your family or friends or your own banker that you can equip with an email that they can forward to for you, that is not geared towards you. It is geared towards that person and how you can help that person and their bank. And likely in that order, okay? Like that person and their bank, how you can help them, not anything about leading with you or your company. So that's my challenge for you guys this week, this month. Let me go ahead and see what kind of questions we have out here. Jacob, thank you for joining. I know you included this one early. I appreciate you joining out here. Oh, thank you, by the way, Jacob, for the sweet comment that you sent my way. We had another great comment out here. I hope this is informative, you all. I just want you to know that you have alternatives, and I know it can be extremely frustrating in this space, and that you often might feel like you either have to give away your agency or your equity in the company. But there are moves you always have that you can make before you have to do anything like that. You are smart individuals. You have built something that the market needs, and now you just need to prove that out. It sounds easier when I say it. It is going to be like banging your head up against the wall. You're going to be like a Roomba. If you guys have seen those robot vacuums where you bang your head up against the wall, you pivot, and you just keep doing that to try to vacuum the room. Okay, that's what it's like. You have people, you have friends that are out here to help you, of which I hope you consider me one in this space. Okay. All right. Let me see this one out here. Jacob, I am not sure. Nyanka. I am not sure what you mean by that, kind sir. If you wouldn't mind, you can DM me directly on LinkedIn, and I'll answer your question for you there. Okay. How about NAGGL? This might be in relation to an event. And I have to be honest, whomever sent this, I'm not sure about this event, or at least by these initials. It might be out on that William Mills list that I recommended to you guys earlier. Again, just in case you need that, here's what I recommend. They update this every year. Go out to the William Mills Agency website. Bottom right-hand corner of their homepage, you are going to see the event and trade show directory. You can download it with your email address, okay? All right, I think we answered this one here. BTV, Bank Tech Ventures. Bank Tech Ventures. All right. You are welcome, LinkedIn user. You are welcome, Esteban. Who else do we have out here? Oh, should you pursue SOC early or wait till there's definite bank interest? Pursue it early. At least get SOC 2 Type 1 to showcase that you know the importance of SOC 2 to an institution. You can always say, if you have SOC 2 Type 1, which is a lower spend, by the way, you can always say and use that as an anchor point to say, absolutely, we have SOC 2 Type 1 and we're working on SOC 2 Type 2. Please be aware, if your solution requires sort of PII, customer information, any sort of, even if there's any what is the term that is used? If it's regarded as a business-centric product, that's not the right term. Forgive me, it escapes me. If your product becomes required for their business to operate, even if you're not doing any sort of PII, they will require you to have a SOC 2 Type 2. In a nutshell, SOC 2 Type 2 will be important to your continued success. Period. Full stop. You can begin with SOC 2 Type 1. Use that to showcase that in operating in the space how important it is to have SOC 2 Type 2 audits and offer that compliance around those needs. And then showcase that you are proceeding with SOC 2 Type 2. You might even build that into your agreements moving forward. That's something that I've done before, where you say contingent upon successful SOC 2 Type 2 completion. If we don't do that, you can cancel the POC or cancel the commercial agreement. You'll need both. Start with one. Use that as your anchor point moving forward, okay? All right. Oh, Ninka. Okay, very good. Hi. All right, you all. I think we are at time. I hope this has been helpful. If you want more specific types of conversations, please don't hesitate to DM me. I will offer you my view on the world, of which it's one of many. But I've played in this space a very long time, both at very large companies and assisting very small companies, that my goal is to ensure that you have the best opportunity to move forward and create a viable business for yourself. And you don't always have to do that with the ways that people tell you you have to do that. If you don't have a strategic advisory board, please consider one. That will also help you open doors and create a network for you. It may require some equity or cap table being tracked, but be smart about it. If you're going to go that route, use people that actually can get you into the conversations you want and press those people for those conversations. But do that before you just start going out for more generic intros with all sorts of different people. With that, I'm going to leave you on this Friday. Next month, we are going to bring it back. I will put up the details about next month's Fintech Onramp shortly after this conversation, or you can subscribe to the Luma calendar, and those will be out there for you anytime to be updated to, okay? You all have a fantastic weekend. Thank you so much for joining live, and for those of you that are going to be joining after the fact. Thanks so much. Let's be good friends, okay? Bye-bye now.